Hello, it's just after the close on the 25th. Let's take a look at what's going on. So let's recap on the markets. Here's the S&P 500 cash. This is what we looked at last time we were looking at the markets. We had this 38.2% Fibonacci level here. This was the low all the way back in 2009. This was the high there. Let's just do that, make it a little clearer. So yeah, 2009 low, high this year. And we were looking for 2350 as a potential target. We went through that. The next target down is 2030. Bear this in mind. And this is just the first stopping point. And remember, we popped this pitchfork in, which the course members know all about. And that turned out to be a pretty good target in the end, more accurate, and caught that midway point, because people are saying, well, regular traders are saying it didn't catch either of the Fibonacci levels. Well, that's the reason why. So that there is that. Let's just reiterate these points here. 2030 would be a significant level, and then if we do fail through there, 1708 on the S&P cash would be significant levels. So what I've done now is I've put the warning line on. This heads through beyond the 61.8 level and takes us down to about 1650 to 1700, and I think that's a very realistic target. Fundamentally, yes, we're expecting an up move. The governments are inflating like mad. They're going to be printing money. That has to go somewhere. So there's going to be a bit of an up move. We're seeing a bit of it today, but it's not really following through. Remember, we had that turning point from the market timing report for the 23rd, so that has worked. But this is just the bigger picture we're looking at. We'll come to that in a minute. And this there then takes us down here. And I think this is a very real possibility, because it looks like this virus hasn't really hit America yet. I'm in England, as many of you know, and it's starting to get bad here. And I think we're a couple of weeks ahead of America, and we're also probably 2 weeks behind Italy, where things are pretty bad. So those are the bigger pictures, just to recap on that. Now, this is a reason support. This is the Dow. Here's a reason supporting a bounce, and we've certainly had it, and that's because we pretty much hit the 50% level. And remember, again, the guys girls who've been on the course will know that's just a critical level, and it's practically impossible to get through a 50% level without some sort of test, especially when it's of this great magnitude. So we fell a little bit shy of that. It bust the pitchfork here, went sliced straight through the 382, and we did get to this point here. And so that was the bigger picture bounce kicking in there. And you can see we've come back up. But look where we've come back up to. We are not far off approaching the old 382 level. So that is quite an interesting point. And once again, as I said in the previous video, just recapping these levels, the NASDAQ 100 proved to be quite resilient. Didn't even get as far as the 382% level. It has popped back up a little bit there. So that was the strongest. But again, just bear in mind the key level there on that is likely to be down there at 53.71 at the 50% level, and that's 6398 is the 382 level. So watch those levels there. Now let's return to the S&P and look at the bigger picture on the cash. Let's take off that pitchfork, and we'll take off the bigger retracements. We got down here, and potentially here the 382, 38.2% retracement is at 2650, 2648. That could well be a target if it maintains, if it carries on through. It remains to be seen. I'd be quite surprised if it got back there, but that's just a personal opinion. But that would certainly be a significant target, and I would expect upside resistance, overhead resistance at that level there. Now what I've done is added the 23.6%, the 2.236 level. We didn't cover this in the course, but again, this is a significant level, and this would be a level well worth watching, as there is likely to be initial resistance at that level. What I've noticed is that we did actually close tonight at 24.75. That's critical, very critical. This could be the first testing level. I think the next turning points we've got will be in a couple of days' time. We'll have a look at that momentarily. So as we can see from the market timing report, we had a turning point on the 23rd of March. There's another set coming up before the end of the month. Let's have a look and see how that 23rd of March point played out. So the 23rd brought in the low here. This is an S&P futures chart, June futures chart and 240-minute chart. We got the low in there, and you can see the channels then went on. We did get one breakout there. That was the 23.50 level, the big 382 level that we've been looking at. So that was good enough for holding, given the big pitchfork I showed you a while ago. The localized channels on this chart were working quite well. And the action-reaction line sort of took us to there, and that clustered, but it didn't take out this high. Now, we have taken out that high now, but we've closed back beneath it, or at least at this time of filming, which is, what is it? It's 20:40, so it's 20 to 9 at night, so it's 20 to 5. We haven't changed clocks here yet in Britain. So we're 40 minutes after the indices cash close. So what do we see? First point really is taking the retracement levels from the high to this low that's come in. The 38.2 level now is 26.40. That I think is a significant level because it also coincides with this warning line. So Merv wrote to me, Merv's a good friend, this is what you need to look at, Merv, in our email exchange. So that point there coincides with this action-reaction line. It's not so far off from this projection from the impulse move, and also we've got this 382 level that we mentioned. So that is that. This is the pitchfork. There was two opportunities to buy it at this level. I didn't go for it, and it worked pretty well, and we exceeded the median line as well. So whether we get to the top of it, I don't know. Certainly this area here. Now that's going to pass time-wise quite soon within the next 4 hours, so we might see a little bit of fuzzing around that. But that's my view on the S&P today after our turning point on the 23rd, which came. Finally, a quick look at oil, especially for Malcolm Graham Wood, our dear friend. You do want to get onto his oil blog if you're oil traders. It is the definitive work, Malcolm Graham Wood there. Just Google him, Malcy's log, M-A-L-C-Y, Malky's blog. That's that. So we've just been exchanging emails as we regularly do. You will see Malcolm on television quite a lot. These are the levels we're looking at. We caught the halfway point here. That has held for the moment. Whether it's going to continue to hold, I don't know. I strongly suspect that this sort of level here, around about $14, $15, will be a sort of final resting place, albeit in a little while. I wouldn't be surprised to see it pop up towards this line here. So that's oil. Now, I just want to talk about human behavior and mass psychology. This is the basis of all markets. It's the basis of everything. Markets are the price is basically the outcome of everybody's emotions and fears, hope, fear, and greed. And the movements then are also as they are in proportion directly related to how people believe things are going on. We talked about this fear cycle in one of the previous videos, the 18.6-year cycle from 9/11. When that happened, everybody was living in fear. They thought every city was going to see an aircraft fly into a big building. That was 18.6 years ago. We're exactly that on from now. And of course, there is this mass fear. It's subsided a little bit this last few days in England, but there has been this panic buying and so on relating to the COVID-19 coronavirus. So it's very important it's relating to what's going on right now. Beyond markets is our own lives, and obviously we're at a challenging time. We're in this big crisis point. We're in the 90-year cycle from the 29 crash, the 180-year cycle from the 1837 to 42 long depression. We are probably going to go into some sort of depression, and that's where we're at. So we need to stay focused. Taking the midpoint as well of that 90-year cycle, the 45-year cycle, from 1929 adding 45 years took us to 1974, 1975, the OPEC oil crisis. That's exactly what we're seeing now. So let's talk about this and see what we can influence. And bear this in mind. This is really, I'd like to just put some stuff out there that's occurring to me, that let's think about what we can control. And what you can control is your own positive attitude. Now, mass psychology is everybody has a positive market, we get bull markets. Everybody has a negative attitude, we get panic and bear markets. That's what we're seeing. But individually, control your own positive attitude and your own mental state. This is really going to help you get through. As I said in another video, all these things move in cycles. We are in a set of cycles coming together. The Chinese cycles, the virus cycles, the stock market cycles have all come together. So that's why we've got this big event. Lots of cycles come together, they create a big event. But after every down cycle, there is an up cycle. So keep your positive attitude going. Focus on the fact that we will be out of this. And one of the ways you can control this attitude is really by turning off the news or the sensationalist news, minimizing what you look at there. That's very important. Then also, keep your own social distancing going. You don't want to hear what other people are saying if they're very negative about it. And of course, we're talking about social distancing with regard to the virus as well. Limiting your own social media is also important, especially when the negative stuff's being spread around. And find fun things to do at home. I'm talking to you as people who come to me for the market timing report, the courses, and the other bits and pieces we do. Do that. If focus on it. I've shown you a lot of the techniques. The course is very direct. It shows you how to manage risk and how to look after things. You can also control how you follow the advice of officials and the governments, and please do that. Especially in Britain here, we've been told very clearly to stay at home and to keep very well clear 2 meters, 6 feet away, and the same in Australia. Do that. That's great. So you can control all these things. And also, most importantly, control your kindness and grace. And, we're seeing people here. I'm getting calls saying, how can we help people out? And this is why I'm putting this out. I want to help as many people and reach out and pass this part of the video on to other people. I know a lot of people are not interested in markets. We are. But pass this on. Help people out. This is really important. So keep focused on your positive mental attitude. Know that this cycle is going to end and just stay focused there. And remember, you can't control the actions of others. You can't control how others react. Keep away from them. You can't control if others follow social distancing. And that's basically now I'm talking here, physically about the spread of the virus. And you can't control other people's motives. There's a lot of people with other motives running around at the minute. And you can't control how long this will last or predicting what will happen. Although those last two I have given you views on those. So just bear these things in mind. And above all, you can't control the amount of toilet paper at the store. So please keep safe, keeping you, your family, your nearest and dearest, your loved ones, your employees, everybody safe and alive is the first priority. Trading comes second. But just spread the word and look after everybody. So thank you so much. I'm working on the latest edition of the Market Timing Report. I've got an awful lot to say in that. And for those of you who are on the course, I believe we are planning on doing some sort of webinar Q&A session within the next 48 hours. So watch out for an email from that. So thank you so much. Stay safe.